Well, good afternoon, everybody. Thanks for joining us for the JS Mindset Weekly Call. My name's Denny, and today is Saturday, October 12th, 2019. On the call today, the famous boys, Jim Sinclair, Bill Holter, and Famous Dave. I'm not sure when we first saw some real stress in the bond market, but distress in bonds has now moved to nearly full-blown panic. There is no sector of the bond market that's not in trouble. And it sure looks like the Fed is outgunned on this one, and their QE efforts are going to have to be ramped up in a huge way to make any difference in the impending doom. I think the bankers are scared, and I'm sure the call has gone out to the Fed for not just help, but for total support of the bond markets. Debts of the United States have to be financed, and that has not been going well at all. The economy is struggling, but even now it seems more resilient than I ever gave it credit for. I read a piece this week by Jim Willey that interest rate derivatives trading has expanded to $6.5 trillion per day, and that the fake demand is hiding the fact that default is so close and only hidden by the magic of Wall Street's artistry. The United States appears to have withdrawn from several opportunities to serve the industrial military complex masters of the universe in wars here and there. They're just not taking the bait. And that's just got to piss off the neocons. So here we are in the fourth quarter already, just wondering when things are going to blow. Well, so the whole idea of these weekly calls is to give you some other things to think about. Your investments, your analysis of current events, your glimpse of what things might look like in the not-too-distant future. Always remember, we are not giving investment advice. We're trying to give you just another perspective of the economic world to add to your own perspective, just so you can be prepared for what might certainly be some very trying times ahead. As always, we do appreciate you investing in the premium side of jsmindset.com. There you'll have access to Bill's writings, to Dave's postings, and Jim's postings. These are wonderful times to be living in. Jim, I'm going to start with you today. There appears to be an all-out war between the European Central Bank defending their euro and the United States dollar. The ECB keeps cutting rates, making them even more negative. Jim, once again, you were right that the pressure will be on the Fed to cut rates and to provide QE to start purchasing bonds. Any thoughts now after this last week?
Bear in mind, central to all markets and central to the market action on Friday midday is whatever our leading talking heads have to say about tariffs. But know that the greatest tariff that you can impose is a change in your currency value. And the discussion of the rate, the changes between especially the euro and the dollar, is the biggest tariff discussion you can have. Because as a currency rises in value, every single thing it does, manufacture or service-wise, provides to other nations, is adjusted price-wise. Every time a currency declines, such as the euro, it is the same as adjusting tariff to favor the euro. So the biggest question is not whether or not we're going to have some small agreement this weekend on tariffs or a grand agreement or any agreement. It's what's the rates between the currencies that is the overall factor if you simply take a look at the percentage change. We do have a problem, and it's not our listeners looking for a problem to come. If anybody has a pencil and a piece of paper, make a note. And when you make a note, note the outrageous disorderliness in the overnight money area in the U.S. Money lent overnight, the shortest term lending that exists. The least risk, actually, but the greatest risk. And bear in mind that usually takes place when there is a banking problem in process, not coming up, but rather in process. And that bank has borrowings longer term in many different ways. So the the Fed has got to act. They have no leeway whatsoever. And unfortunately, the Fed can produce any amount of liquidity it desires through a process known as monetization. And debt monetization is what inflation is basically all about. So you can be sure, without having to listen to any people anywhere, that the Fed will provide every and all requirements necessary. And the net result of that is a thing called deficit, which you haven't heard in how long? Does anybody care about the deficit in trade? Does anybody care about the budget deficit? Do you hear it mentioned of the 21 candidates for Democrat, or for that matter, our president, or most of the key leaders in the legislative? The trouble is now, Denny, okay, it is right now. It started a month and a half ago or so, and it's got 5.5 years in front of it, and to put it simply, it's a Lulu, okay? And the markets don't really exist. They're illusions in cyberspace. So I leave you with that thought that up 500 is a joke. You'll see it down 3,000. That might not be a joke. That's my answer.
Bill, the case for gold has really never been stronger, yet it looks to me like the strength for the buyers is overseas. The small gold investors here in the States have just not been acquiring anymore, but rather have been net sellers. What do you make of all that, Bill?
Well, the Americans have been psyoped since 1971 on gold, and the psyops have worked. They're working. You have North American demand is down, and the average retail, the retail position has become, if you want to call them, a net seller. And I base it on just getting pounded day after day, dollar good, gold bad.
David, I've also been watching gold. I still use the charts on gold, but we had that crazy spike when the Saudi oil fields were bombed, and now they've returned to substantially lower levels. Dave, I just don't see oil moving up much, and that'll probably destroy the fracking industry here in the U.S. and some of the banks and investors behind them. Dave, you got any thoughts on the future of the price of oil?
Well, based on the economic outlook, it would be down. And again, when I say economic outlook, I, like you guys, don't think that there's been any magic recovery. Or you wouldn't see oil sitting where it is at $57, $60, whatever it is. So that does put an enormous amount of pressure on the fracking industry. There's an enormous amount of loans there. And you have to look at who gave those loans, and would they have incentive to start a war to drive the price of oil up that saved their butt? Yes, that's a strong possibility. So no, I can't guess to where oil is going to go, because if you tried to play the fundamental game, I would say the pressure will be downward, because as we head into an economic slowdown from here, demand for fuel will significantly decrease. As Bill pointed out in an article that he posted regarding air freight shipping's down, trucking's down, they use a lot of fuel. So again, an average person would look at that and say, well, the price of fuel should be going down. The question becomes is, do we get a wild card in there? And false flags are so easy to come by nowadays that you couldn't, if you were to short a commodity like oil and not have another way to cover yourself in case of a major event, you'd find yourself probably having what Jim used to teach me, religious experiences. So, no, I can't. I can't fathom a guess, but it should be downward based on all the fundamental factors that we have and we're looking at.
I happen to agree with you, Dave. Hey, Jim, I got a listener question for you. It comes from Jack. He wants Jim's opinion on where is the safest jurisdiction to store gold and silver. He says, aside from the stuff that I have at the house, is it U.S., is it Canada, Singapore, Hong Kong, Switzerland? Jim, do you have a preference of where to hold other gold?
Other gold held, number one, private storage, okay? Number two, preferably out of North America. There are some good depositories up in Canada, and they're used by some very intelligent people, so we'll put that in a separate category. But the absolute security is don't listen to what I say, do what I did or am doing. And that is standing on a mountain of physical gold, cheap to mine. And for me, that in direct contact with the politics of a nation, having 10 years ago known that I would have to be more of a landsman than a colonialist to continue to exist in the mining and extractive business. So your choice is to put it in storage. And your storage should be in hand, and like you say, the safest place. And there are safe places. But the world changes so fast, as David says. It's one day to the next, politically speaking. Now, Switzerland's been around a long time. And although Switzerland is definitely not the Switzerland of before, I mean, clearly not, private depositories in the Alps, nuclear bomb-proof, run by honest people, family men, whose address you can know, seems to be the best choice outside of the U.S., outside of Canada. So in your position, speaking to the listener, physical gold in the hand, and storage with a reputable, well-known, good family man. That doesn't mean he can't be bad, but everything we know about him is good. In Switzerland, makes a lot of good sense to me.
Bill, the bond markets just seem so fragile to me. Emerging markets, U.S. Treasuries, all of them seem to have all of their own separate dramas. But, Bill, I got a two-part question for you. First, do you think the Fed has lost control of interest rates? And two, is the Fed just going to have to insert itself in the bond purchases directly in order to supply some demand? Because it doesn't appear to me that there's not enough demand.
The Fed has always been known as the lender of last resort, and I think will be known as the buyer of last resort of treasuries. The deficit now is, we're looking at $1 trillion deficits every year, and it's that the deficit's no longer being supported by foreigners. It's no longer being supported by Japan and China. So who's going to buy our bonds? And the answer is it's going to be the Fed. And you saw that this week. They're going to be buying $60 billion worth of treasuries per month. They say it's going to stop in the second quarter of next year, and it's not QE, and I call bull on that because it's absolutely QE, and it's basically the same size as the first QE was.
Bill, should we believe the facts and numbers that are being issued by the Treasury as to the size of the operation by the Fed?
Right. You can't know for sure that the Fed's balance sheet is even real.
Bill, can I jump in here? Because prior
ahead.
to the call, we had brought up Kyle Bass was trashing China, their accounting standards, and you and I had both made the statement, well, he's got to talk his book because he was short, the China currency for a long time.
And still is.
And I sent an article to a friend of mine who had sent me all this stuff, and, basically it was, if the Fed has to be bailing out banks on overnight money and they won't tell us who, how do we know what the accounting standards are here in the United States?
Right.
Which
bank is it?
Which bank is it? Is this a secret? No. Apparently it's a double top secret. So, how can you trust any numbers that you're getting out of any of these companies on any given day? Could you?
Right.
Well, we know that FASB, the gatekeeper of auditing honesty, that's sort of a oxymoron, has eliminated mark-to-market and on derivatives and all forms of debt, and made it mark to maturity, which is it's absolutely a phantom. It says that thing will mature at or at least what was involved in the first place, even though there is no market for it now, so it's practically speaking worthless. So how do we trust numbers from the Fed or Treasury or Bureau of Labor Statistics?
Well, what you can trust is you can trust that something somewhere behind the scenes in the banking industry is broken. Yes. Otherwise, there would not be a problem with overnight money.
Yes,
and overnight
money,
that's where it shows up first.
And doesn't it always, Bill?
Yes, every time.
Okay.
And I do want to mention this. The yield curve this week, uninverted. That's not a sign to say, hooray, the yield curve's uninverted, because what that means is the short-term rates are now slightly below long-term rates, and every time that's happened from an inverted yield curve, it means recession is right here. The inversion itself says that you're going to have recession. The uninversion says, boom, it's happening.
This is a heck of a place.
It looks to me like a rodeo or someone with a whip who does tricks with it, just flying up and down sideways and snapping wherever it will, and suffering from the same thing everything else is suffering from. Markets have been destroyed by high-tech approaches and by closing down all and every of the previous functions that have existed since they invented the stock exchange.
Well, Zero Hedge put an article out today saying basically the same thing, that this whole past week was nothing but algos. Everything was headline-driven.
And as we mentioned earlier, Bill, who programs the algos?
Right, exactly.
So they know what to feed it to get it to do what they want it to do.
Yes. They know what headlines to put out.
Do you guys find it interesting that we cannot trust the press, what they put out? We cannot trust the government, what they put out. And I'm even suspicious of anything that I read. Zero Hedge, I have my filters down a little bit, but there's not very many news sources, guys, that we can go to where we can give them our absolute confidence that we're not being fed or spoon-fed. I'm starting to sound like Dave.
Well, any is the important point. I mean, any, even the ones you like.
Hey, David, I saw this week that a lawsuit was filed by the Southwest Airlines pilots against Boeing for the 737 MAX fiasco. And the union is blaming Boeing for rushing the 730 MAX into the air, and that the grounding has cost the union pilots over $100 million in wages because of the canceled flights, the compression of their schedules, because now Southwest has to work with a smaller fleet. Now, Dave, I'm not asking for a legal opinion, but by golly, have you ever seen this sort of logic against a manufacturer? And is this a sign of things to come, Dave?
Well, it's just a sign of the chaos that we've allowed our corporations to create, because they're truly all too big to fail. They're too big to fail. Again, as I said to Bill when we spoke earlier, he and I had specifically worked on one project for over 20 years together. And in those 20 years, no matter who's in office or what's going on, what the story of the day is, the military-industrial complex and the banks always win. Always win, no matter what. And even when they don't win, they get bailed out. Well, that creates a culture of people doing things that if your butt was on the line for it, you really wouldn't do, because it would be the end of your career and possibly the end of your company. Well, we've taken all those rules and thrown them right out the window, And basically we have a free-for-all going where profits are in front of everything. And this is just a perfect example of it. And, now you're seeing groups that have been harmed step up and say, well, not only are we harmed, the people who died in the plane crash, but everybody else's life is being harmed that, functions around these things. So again, it's basically, it's none of this surprises me. Again, I'm surprised more of this doesn't happen and more of these problems haven't surfaced. Use as an example, now California, they're shutting off the power. I mean, what, is this a third world country? I mean, who designed this power grid? Who's in charge of, all of a sudden it came to us, all right, now we're going to start shutting down the grid. Insanity, Denny. We've allowed our big corporations to run amok, and as I've seen the statistic, most of our major corporations are run by sociopaths. So does any of this surprise you?
Socialist sociopaths. May I add 2 points, David? The FAA used to be one of the strictest bodies in terms of administrating their area of responsibility. And I say this as having been a pilot for maybe 25 or 30 years ago. And they really drove you mad. Boeing is extraordinarily well connected throughout both parties, or if you want to say, by the one single party that looks like both. And Boeing, the FAA permitted Boeing to undertake the certification of their own aircraft. And no longer did they require a third-party confirmation. Sure, they got certified. They got certified with triple redundancy of computers that argue with each other over the angle at which a thing the size of a playing card is at the moment, which is called a measure of the angle of attack. So when the three of them argue with each other, the whole thing goes down, and so does the aircraft. The problem, the war between the euro and the dollar has its genesis in the Airbus. So the political involvement in economic and currency changes, or to make the change to make it go the other way, is so severe that it surfaced clearly when people were killed needlessly. And when the review of what three competing computers can do was not properly analyzed, you can't shut the damn things off. That's the problem. There's nothing in that cockpit that you can take a .44 Magnum and blow away and everything will be okay. You can't come back to flying the airplane yourself. It's impossible. So you struck on Denny, on a very serious problem there, and that is when politics overtakes common sense and politics begins to control economics, and the fallout from that control of economics takes out how many thousands of pilots, how many hundreds of $1 million, how many lives. We really have gotten ourselves into a heck of a mess. And the Boeing situation, look at the stock. Doesn't go down. You think that's real? Okay. Well, the decline in Boeing in the event of their product not working certainly was modest at best. So we have a tremendous conflict between what's good for the power, what's good for power brokers, what's good for the economy, and no focus at all on what's good for the average person. That's my comment.
I'm reminded of a T-shirt
over every aspect.
I'm reminded of a T-shirt I saw once. It had FAA, EPA, IRS. We're not happy till you're unhappy. But for the Boeing Corporation to be able to self-certify their own aircraft without any FAA oversight, well, there might have been some, but that was a real relinquishment of responsibility of the FAA, and you can see what happened. But I have to agree with you, Jim. It goes back to the Airbus competition, and I rather imagine the feds were told to stand down and let Boeing go on.
Of course they were. I mean, that's the only logical answer to an illogical situation.
Yeah. Go ahead, Dave.
Well, and then I just want to sum this up by saying what I said earlier before we were recording. You can't trust anybody because money is the root to all evil, and everybody who's got a pile of it somehow disregarded something along the way, and this is a perfect example of it. Money got in the way, and you can't even trust your corporate executives to not put people's lives at risk because it's all about profits. They needed to roll this out, and I'm in 100% agreement that this was in a war against Airbus. We wanted our jets over there, and, so now our jets are around the world, and they're all parked.
You sort of pitched underhand to me because my next question to Jim was, Jim, so many times you've talked about the old European families that are always ahead of the rest of us in their investing. And likewise, the bankers seem to be ahead of all of us. So, Jim, what do you think the old wealthy families are doing now to prepare financially for what's coming, and what do you think the bankers are doing to do the same? So let's start with the old wealthy families, and let's talk about the bankers. What do they see ahead that we don't see?
They see just what we were talking about a moment ago in finance. Now, if you take the thing we just discussed about Boeing and apply it to auditing, then you see that the FASB, the Auditing Standards Bureau, having adjusted their consideration of what is a valid price of an investment for a bank and took it away from what it's worth in the marketplace to some value 20 years from today it might have, or 10 years, or any period of maturity. So the aircraft industry started to cause difficulties with the currency relationship. The aircraft manufacturers manufactured deadly products, and the heart of auditing made auditing an oxymoron joke. So everything is given up and been adjusted by the parties that you're asking about. And their ability to protect their wealth has always lied and always fallen back to resources. And resources are different today. An aquifer in Central America may be as important as a gold field in South Africa. But it falls back to resources. When money fails, resources survive. And that is that is where the old European families are now and have been for a decade concentrating their attention. And this is fact, okay? Simple fact.
Bill, the Fed keeps cutting rates, and slowly as it might be, the U.S. dollar exchange rate is holding steady, sometimes even climbing. And I'm reminded that back in mathematics, we always had these simultaneous linear equations. So, Bill, where the Fed's cutting rates and the U.S. dollar exchange rate is holding steady and even climbing, would that not indicate that the Fed needs to cut rates more rapidly to fix this exchange rate situation that we're seeing specifically with the euro? Pass. Okay.
I'm just kidding.
Oh, okay.
The reason the dollar has been strong, and Jim's talked about this, we've all talked about this, the reason that for dollar strength is because of the synthetic short that over years and years and years of trade deals, business deals, they've been done for years and years and years in dollars. And the culmination, when a deal terminates, there's demand for dollars to settle the transaction. So that's the reason for dollar strength. And you hear probably 2 or 3 times a week. President Trump coming out and saying the dollar's too strong, the Fed's a bunch of dopes, we got to get the dollar down. On one hand, he's right, because I mean that would make us more competitive. But on the other hand, you're talking about the reserve currency of the world, and how good is it if the reserve currency of the world is trying to trash itself versus the currencies that basically the dollar supports? Because all these central banks own dollars as their primary reserve. So if you have a dollar that's disintegrating, what does that do systemically? Because these central banks, the biggest reserve that they hold are dollars.
David, we've been talking about the oil fields. Although I don't have proof, I have statistical data that says the Ghawar oil field in Saudi Arabia is nearly depleted. Now, that was the one that took the drone hit. And then suddenly the Saudis were reassuring India that they could supply every drop of oil they needed. Then I'm looking at this relationship between the United States and Saudi Arabia. So, David, this is just a quick question. What is the future relationship between the United States and Saudi Arabia? Because it has clearly changed.
Well, we talked about this actually, a year or two ago, and we actually believe that Saudi Arabia is going to move closer to China and Russia. And they're probably going to have to, because China's going to insist on paying them in something other than the dollars. A lot of what you're talking about could have to do with what we're seeing with the false flags in Saudi Arabia, with the false flags with tankers. There's so many parts to this Rubik's Cube. And Saudi Arabia is, in my opinion, one of the most untrustworthy, worst on human rights in the world. That being said, I wouldn't trust any of them as far as I could throw them. So they're sitting there saying, can they trust us? And we're sitting here saying, can we trust them? In that situation, I would see them cozying up more to China and ultimately switching the sale of their oil to these countries in a currency other than dollars, which would be the death. It would be cut 1,000 cuts. So, and again, I don't believe Saudi Arabia is sitting on nearly as much oil as, just like you. I think that that's one of the biggest lies that's been told for a long time. Because again, their oil and Fort Knox have something in common. Outsiders never seem to be able to audit it.
Well, Dave, why do you think they're doing or trying to do the public offering of Aramco?
Exactly.
To get out before anybody figures out that these holes in the ground are empty.
Exactly.
But
Dave,
what's interesting...
One other quick question for you. Yeah. This tanker, the Iranian tanker that got hit by 2 missiles, I don't even know how the West explains that one. Iran attacked their own tankers?
That's true.
Well, since we're talking about that, you just talk about eventually we're going to see Chinese Saudi Arabia. But in that Aramco IPO bill, the stock issuance rules, they went out to the 9 largest banks in the world, but no big Chinese bank was invited. And that's sort of a pretty big insult to Beijing. Is there a private deal with Beijing, you think? But in the Aramco IPO, it didn't go out to any Chinese bank.
You would think there has to be some type of private deal behind the scenes.
That's exactly what I was thinking. Publicly, you shame them.
Saudi Arabia has been cozying up to Russia and China since at least 2015.
Let's take it a step further. Jim, I think we all believe that the world is de-dollarizing. We can see it in the oil markets, but I'm interested in what Jim Sinclair thinks about de-dollarization throughout the world and what it's going to look like in the next several months. We're not even in the beginning stages, Jim. We are full throttle in de-dollarization. Where's this going to be in 6 to 12 months?
6 to 12 months for the basic cause of de-dollarization at this time is probably too short a term for a consistent or for sound predictability. Over this 5.5-year period that we're in, as contracts in dollars matures, contracts are being made in other than dollars. And the deeper we go into this adventure of the next 5.5 years, the less contracts there will be left to settle in dollars is the key to de-dollarization and the key to the technical synthetic short of the dollar, and the key to the answer to your question. The process is that in this great race to lower levels in all fiat currency, there is only an ability to create less of a facility for maintaining value in any paper item, especially within the currencies themselves. And going back in our discussion, what Bill was having, and it did become quite complex there for a while, those competing with me in complexity, I got the feeling that we were standing in one of those funhouse mirror rooms, and currency values are only reflections of each other. But the real value of a currency is in how much of a standard of value it maintains. And so we argue about the $1.95 or par or 82 or 56. Oh, terribly relevant, but also irrelevant, because we're arguing about an index of failing paper units that have no semblance of ability to maintain the value of the purchasing price or your standard of living earned by your sweat and tears over the years going into the future. And the worst victims of that is the silent old folks on fixed incomes who have been absolutely erased. But everything in my mind is in motion. I don't look at things as being pictures in time. And all of this is one process. And if you want to get down to what that process is, it's the ability to maintain value over time. And there is only one thing that ends up doing that, and that is physical precious metals. So what's been happening for the last 2,500 years is probably going to continue certainly through our lifetimes. And what we're discussing in all the subjects we hit today is lawlessness, lack of respect for tradition, new ethereal considerations of what is value and what isn't value, destruction of the market mechanism that used to be a pretty good matrix for determining value, and implantation on top of that of systems which are simply green and red dots in cyberspace. Of our FAA, our IRS, our FASB, all becoming enemies of humanity, of airplanes crashing, and the stock doesn't. What's that all about? They're making toys now. So with everything we've discussed today, you've got to see there's a common thread, and the common thread is standard of value being attacked from every direction. How would the old European families protect themselves? There's only one answer: resources. And resources in the modern sense. Water is a resource. Control of aquifers is a resource. It all comes back to nobody believes in anything. There is no standard of value. There is no standard of thinking. There is no standard of morality. There is no standard of courage. And the answer to that is, I don't know what tomorrow looks like, but I'm telling you, it's changing and changing fast, and it has no resemblance to anything that I saw in the 1940s and 50s. And it's accelerating so fast. What is the market's going to look like tomorrow, now that you've eliminated the broker by eliminating commissions on trading or the broker's income? What are you going to have, vending machines? I have to stop it there because that's an answer that I need to come to. What does tomorrow look like? And I don't have the answer to that right now, but I'm sure working on it.
Bill, I'm going to make you do something that you probably don't want to do. When I was growing up, and I've listened to Dave talk about Richard Russell and Dow Theory Letters, and we've all read some of them. One of the greatest books ever was Ted Williams' book. What I am looking at is a very powerful rally coming in gold and silver, and I like it to a spring being wound tighter and tighter and tighter. Gold finally broke through that resistance at 1450. So for those of us who are chartists, and the fact that it's held above that 1450 in spite of this massive selling by the cabal, the next target, from what I can see from old charts, and I'm not sure I trust charts anymore, but the next target is $2,000 an ounce. So, Bill, I'm going to ask you to do your
old highs.
That's the old highs, right. So how soon do you expect the spring to be let loose, Bill?
Oh, I mean, it could happen at any time. The breakout was from 1350, and we had basically a 10 to 15% move up to 1550. And I am encouraged, if we're even resemble a real market, it's encouraging that you're seeing this consolidation well above where it broke out from, which is, as I mentioned, was 1350. So that's very encouraging, and it has to be disheartening to those who are short, because gold's not giving it back, and obviously what that means is the risk is to the upside, not the downside. As far as the timing's concerned, I can't tell you. I mean, I don't have a crystal ball. Jim's made some great calls in the past for long-term calls, like 1650 by January 2011. He was off by 6 months. You can use French curves, and actually we had markets that were not 100% manipulated, whereas now everything is run, everything is priced, everything is manipulated. It's all done with paper. It's all done with derivatives. And what you're asking me, I guess the way to answer it is you're asking me when does the rig break? And the answer to that is whenever gold or silver does not get delivered to a buyer. And I think we're close, because the EFPs that have been going on now for close to 18 months, they wouldn't have gone through the process of exchange for physical via London if there wasn't a problem at COMEX. So there's obviously a problem at COMEX, and what we've seen be pushed over to London, it's an impossibility that much metal even exists. So to answer your question is, this thing will break and gold will make new highs as soon as either gold or silver does not get delivered to somebody who demands it.
David, the GM strike continues, and we all remember Jimmy Carter's period of high inflation, and even Gerald Ford. But the GM labor strike, we're old enough to remember that long-lasting labor strikes during the 70s and 80s were mostly driven by inflation issues. Now, we've been told all this time that inflation is under control, but it's been a while since we've seen a major fallout between management and labor. I'm sure it's there, but so overt in the press, I'm beginning to see this as an indication that real inflation is upon us, Dave. Have you got any thoughts of this relationship between strikes and inflation?
No, I never thought of it in that term, meaning, that causing this strike. What I think that we're seeing is unhappiness on the part of the worker at how things are panning out for them. And, as Jim talks about, the most endangered species is the elderly. Well, also one of the most endangered species is the middle class. It's slipping away, and as it slips away, you're starting to see people take drastic actions. And again, General Motors shouldn't, in my opinion, should not exist as the company that it does. It wouldn't if we did not bail it out. And I think that's some of the anger that you're also seeing coming out of the employees at this stage of the game. Okay, so now this company's turned around, it's making all this money, and, we don't feel like we're getting our share there. Well, you're bound to see more of that because, I spoke to a really good friend who runs a very, very large company in the Boston area, and he was telling me, what some of his 20-year employees were making, and I was in shock at how low it was in comparison to what the cost of living is in the Boston area. Now, what they were earning is above what you would call middle-class wages, but not by a lot. And even he said, he was amazed, but that's the pay grade for this type of job, and, basically that's what it's demanding, and that's what the company pays. And I'm sitting here thinking to myself, since 1975, the middle class has just been robbed and cheated and robbed, and what they would do has been replaced with a promise called a pension. And, we saw what General Motors, GE, did with their pensions. So when you see this, to me, it's a pressure building up in the system. People don't want to work for promises anymore. They want to work for more bread in their pocket. And I, was inclined to believe before you had brought that up that was the real grievance. I will look into it further now that you've said that and, try and read things from a different angle.
It's just comparative charts. All of a sudden you lay over a chart of inflation and where strikes take place, and there's a real correlation there. All right, so I got one question left for each of you. Bill, I'm going to start with you.
I pass.
Gosh, quit it. So J.P. Morgan's trading desk for gold and silver has now been accused of being a criminal enterprise, a RICO. Yeah, by the Justice Department. But here's the question. Is anything going to come of this? In other words, seizures of assets, RICO law prosecutions? How are you calling that one, Bill?
Normally I would say no, they're going to hang out to dry, 3 traders or 5 traders or whatever. But because RICO's involved, it just becomes so much bigger. I mean, RICO goes right to the heart of the employer, and the employer being J.P. Morgan. If I had to guess, once the markets they realize that there's no saving the markets at all, then they'll torpedo J.P. Morgan.
As a scapegoat?
Well, yeah, exactly. I mean, right now you can't torpedo J.P. Morgan because you torpedo the markets. But if the markets are already gone, then you pile on. It's like what happened after the 1929 collapse. You had all kinds of legislation, and you had people go to jail. I mean, how many people went to jail after 2008? Like 3? Nobody went to jail. And that's because they were able to keep the markets together. And you can't be putting people in jail if the markets have held together. Putting high-profile people in jail breaks confidence, and that's what they don't want to do is break confidence. But if confidence is already broken, then you can go right to the heart of it, and the heart of it is J.P. Morgan.
Yeah, it's like a huge room full of dynamite. You just don't know which blasting cap is going to fire first. But I think you're right. Once one blasting cap goes,
they all go.
They all go. All right.
Wait a minute. Before we move on, though, can I just throw something out there for people to chew on? Bill, you and I know that J.P. Morgan acquired a big chunk of this metal short position. It's our belief.
Through Bear
you
Stearns,
can't
right.
prove it. who Bear Stearns. So, and again, to defend J.P. Morgan or just, to play devil's advocate, because I can already hear, well, you stuck us with that bad book, and you were the ones who wanted the metals market manipulated all along, so we were just doing your bidding. So that thrown into the mix, I would hate to be the little guy, because right now the little guy, if I was him, I'd be saying, those scumbags, they set me up. They knew when this all went bad that I was going to be the fall guy for this. And
that's
the big
why
shots
you have the physical metal in your possession.
Bingo. So,
or
again, I'm just,
stored.
RICO's a great act. I'm really familiar with it. And, it would be great if they would throw Congress in jail under the RICO Act. But in any case, when I'm looking at J.P. Morgan, because we are in the belief that whoever is doing the heavy manipulation of the metals market is doing it with the blessing of the United States government.
They have to be.
Have to be.
Absolutely have to be. There's no way. I mean, my background as a branch manager of a teeny tiny branch, and I've said this all along, if they want to know who's doing what, pull a time and sales. I mean, I used to have a couple big traders that thought they got ripped off on a trade. And they'd say, get me a time and sales. I want to see how this went down. And on the time and sales, you get to see all the trades and, which firm they came from. So if you want to find out who blows out, 10,000 gold futures in 30 seconds, that's totally simple. I mean, you could do it. It could be ordered at 8 o'clock in the morning, and you have your answer by 9.
I want to talk about political capital and how it's spent. And Dave, I'm going to you. You've mentioned so many times that cities and states are going to go bankrupt. And when the stuff hits the fan, it isn't going to be pretty. Some cities already have, Dave, and you've talked about cuts in police forces and firemen's pensions, but cities can turn to the states for help, and states can turn to the federal government for help. But my sense is that the citizenry is just not going to stand for any of that. So, Dave, here's your question. Do you see any political capital being spent to bail out the likes of Illinois or California when push comes to shove? In spite of all the voters, do you think that the politicians will spend that political capital to bail them out?
Let's start by saying they will never take blame for the problems that they have caused. And I do believe you will see them bailed out with a devalued currency that the government's going to have to come up with, because if not, civil unrest. Imagine if all the police who have retired all of a sudden weren't getting their money. That's a big block of people. So, and
it's a big block of
common
people
sense.
who know how to use guns.
Well, again, I didn't want to go there, but yes, that's where I was going with it. To firemen, the same thing. All of a sudden, all the firemen and cops are getting screwed. You could have some real civil unrest on your hands. So what I really would see happening is what Jim talks about all the time. We just go to hyperinflation. We just print the damn stuff, pass it out. It's not going to buy them a lot, but they didn't get the politicians didn't screw them. That they'll blame it on the boogeyman, the terrorists, the currencies, the cryptocurrencies. There's always going to be a boogeyman for them to blame it on, and that just is my opinion from watching it, for as long as it's gone on. So I think the obligations will be paid with monopoly money, for lack of a better word.
Did I not just see last week that 20,000 pensions have been put on hold by General Electric because of economic conditions?
Yes.
In the company?
Yep.
It's cleaning up their balance sheet.
That have just gone. Of the 20,000, how many do you think got savings outside of their pensions? The statistics don't hold up many. I mean, we are seeing people screwed, squashed, killed financially by the circumstances going on without any advocate anywhere.
That's political capital, and it'll be interesting to see whether they go with the voter and John Q middle class. And I'm not calling that one. I'm sorry I put the pressure on you, Dave, to call it, but I was interested in how you saw it. But it's political capital. Yeah. then I don't think they will either.
No way.
All right, Jim, the last question of the day. In the political arena, all we hear about is gun control and more strict requirements for gun transactions, even between individuals. Recently, Germany, of all places, is requiring more reporting for the exchanges of gold between parties in the context of fighting terrorism or money laundering. Now, Jim, this is a new one. Will this be something we will all have to deal with eventually, or is it doomed to fail? Are we going to have to report private transaction, or the expectation, we probably won't, but the expectation for us to report private transactions, bullion?
Yes. Put bullion in the same category as guns. Okay? Put bullion in the same category as a dangerous-looking weapon, which is simply an automatic rifle. Semi-automatic rifle. The problem is that gold is the currency of terrorism. And it will be a basis why in North America mines will be nationalized, where reporting will be as strict as any other same and similar situation, prescription drugs, these items which are considered to be less than viable for the future of society. Gold in the hand and gold elsewhere, or gold under your feet in a country far, far away, is probably the safest thing you can possibly do. And if you think that the great sources of wealth don't recognize that in resources lies survival, then you really don't understand what's happened and is happening in the world. And, back a step. When will gold take off? It already has. Slowly, slowly, and then all of a sudden, over a weekend, over 2 days, the major move. Twice. That's what I expect, and I expect that in the next 5.5 years.
Okay, kids.
Now 5 years.
Yeah. That's about it for this week. We're just under an hour, coming up on 58 minutes. I don't think I've kept you rascals down below an hour for a long time, but you gave me good comments this week. I got to give you credit for it.
And
okay,
eloquently.
Yeah, eloquently. Well, listen, folks, that's it for us. We do appreciate the support of the premium side of JS Mindset. We wish you the best. We will be back with you next week, same time, and just thanks for listening. You guys take care of yourselves this week.
Thank you.
Have a great day.
Thanks.
Thanks, everybody. Bye.